Regcast.
Regcast.
Welcome to Regcast,
where we shine a light on banking digitization. Welcome to February's first Regcast. We're shining a spotlight on the key pain points for the system and how the regulated and regulators are coming to grips with technology this decade. I'm really pleased to introduce, we got Rachel, longtime friend and editor, senior editor at Thomson Reuters Regulatory Intelligence. Thanks very much for joining, Rachel.
Morning.
Sam, partner at Shoesmiths in the corporate M&A and financial regulatory arena. Hey, Sam, how are we doing?
Very well, thank you, PJ. Thank you for having me.
Our pleasure. And not last but not least, Gavin Stewart at GT, Grant Thornton, but a former regulator. Gavin, how are you doing?
As well as could be expected.
Well, happy February, everybody. I think it's been a heck of a start to the year. What we promise people to do in this show is to contextualize the strategic issues and help inform their strategies. As we're digitized, we all need lots of input on what's the right thing to do to be safe. I've been amazed this year alone as we've started to look at what's changing. We're starting to come out of COVID, but we're all still working from home, and we still have to focus on operational risk and digital resilience. We've had regulators continuing the drumbeat, but they've had some changes as well. As of Friday, we had a new head of the BaFIN in Germany, and this month we have a whole set of reports kicking off on the FCA and the FSCS. But I guess the biggest thing this year has been the market, right? So we have had Brexit, we've had a whole U.S. election, we've had FireEye and GameStop. And so, Sam, I guess I'd like to turn to you first and say, well, what does this all mean? What is happening right now in the markets from your point of view?
Thanks, PJ. So my little coterie of clients and my small self-centered universe revolves around wholesale markets and broking, algorithmic trading, and that. So quite a myopic view of the world, but that's where I'm looking. So to contextualize from where I'm coming, the market's absolutely bonkers. What we're seeing is inevitable outcome of the democratization of the financial markets, which all regulators, particularly in the EU, seem to be very keen on. To focus on the Wall Street bets lot, and we had GameStop, which did have a substantial impact on various of the large market players. On the short squeeze side, and ongoing right now, we've got the what they're hoping is a short squeeze, but is otherwise just a massive buying frenzy of physical commodities, particularly silver, and that's had a knock-on effect with the brokers in that space, Vinhood and Interactive and others, who are wrestling with two major issues. The first is margin, margin that they want from their clients, and margin that they're having to pay into the central pot to keep market stability. And second is the market abuse side. It's not unheard of, because the Reddit sub-threads have been around for some time. You've had stonks which have gone stellar on the basis of stock tips and discussions on Reddit, and then Nikola Motors is one particular one. And you've also got the issue of shorting. Now you mentioned, PJ, the replacement of the top man at BaFIN. Well, the reason we all know that he is replaced was his attitude towards the short selling of Wirecard over the last few years, and those who did it, and those who publicized support of it or the rationale behind it.
And so Sam, I guess the question I always have for these incidents in the market is what's new, and what's changed. I guess, Rachel, do you have a perspective, because you've been monitoring this for quite a while?
Well, one thing that's not new, sorry to start off with a not new thing, is that Robinhood and some of these online free trading platforms have been having a lot of compliance and risk management issues before this blow up already happened. So there's risk management and there's business model risk here as well. So they have people on the one hand who are trading for free, and they are selling their order flow on the other hand, and having margin calls, and having the people who are buying their order flow probably having a difficult time handling that. So that's sort of the base that they're working off here. Is they're a troubled company, and now all of a sudden they've been besieged by lots of customers putting on these trades, and they have kind of conflicting issues between the people who they depend on to keep their platform going and their customers. And now they've got politicians in the U.S. howling that they've cut off the day trader types and saying that was really unfair. So I think, I don't know if it's new or not, but I'd say, potentially the idea that we've got these platforms, and it's not just Robinhood, we have them here in the UK as well, that have a social media element to them. It's the gamification of trading. And one of the things, just from the market abuse perspective, was, and I don't have an answer to this question, is when all of these day traders started piling into these various stocks, BlackBerry, GameStop, or whatever, why weren't there signals going off that this was a problem? Like, how did this get so out of control? Didn't they have something that an alert that said this might be market abuse? Because this is something that the regulator looks at, crazy volume spikes as being an indicator that something's going on. And it's not clear to me that any of that happened. And then it looks like a couple of days later, they just pulled the plug on them. I think one of the things here is that none of it really adds up. It's just, we have systems and control failures all over the place. And it's hard to look. You've got conflicts of interest, you've got the margin calls, you've got the market abuse things. I mean, what the heck, I guess, is what I'm saying.
Thanks, Rachel. I guess that from a commentator's point of view, there do seem to be many different angles here. I mean, Gavin, what's from your perspective, being a former regulator, what are some of the areas that you tweak your interest the most?
So I think the first thing is whether there's anything fundamentally been exposed as being wrong with the market and the way it operates. So there's going to be a lot of volatility. Is there something underlying there that means that regulators need to get involved in real time? That might be the case, but actually it's pretty risky for regulators to get involved in real time. And then there's obviously a kind of a post-mortem when the dust settles. And there's clearly something here in terms of your thing about what's new. There's clearly something about certainly the volume of retail traders involved and acting en masse. There's something about the platforms and so on, which Rachel's talked about, and there's something about the speed at which it's all happened. But that'll take a bit of analysis. I mean, there's lots of risks of regulators getting into knee-jerk reaction territory. And they'll want, as far as possible, to kind of create a bit of distance and objectivity in terms of their analysis. But so I think the ability, the extent to which they're able to do that, that will be good, because regulation made on the hoof is rarely good.
Yeah,
I completely agree with Gavin on this, and I think it's showing up, at least in the UK, where the FCA made an announcement on Friday last week, where in terms they basically said, look, if your broker cuts you off or demands additional margin, as long as they're acting in accordance with their terms and conditions of business, don't come crying to us. It was a completely hands-off approach from the FCA to that extent. And to answer your earlier question, PJ, or discuss your earlier question in the context of what Gavin said, where I think this is going to go is that pendulum is going to swing back from where it is now, which is, as far as someone who is involved in the wholesale markets is concerned, the wholesale markets being treated by the regulators much more along the lines of if their customer base was retail. So the obligations as regards best execution and conflicts of interest that are being applied to the wholesale markets and the wholesale participants are much more appropriate as if the user, the direct user, was a retail customer. And what we're finding, what I'm seeing at least, is that the retail customers and the trader bros and the Robin Hooders of this world are going to discover that the rules that apply to the big boys and girls in the wholesale markets actually apply to them too.
Can I just chime in for a sec? That's something that the FCA made clear last year throughout lockdown, when there was a lot of concerns about personal account dealing and insider information controls. They did say that, remind people that just because you are not a financial services employee doesn't mean that you can't be pursued for on market abuse charges. So it's something they've been talking about a lot during this lockdown period, because, as we all know, market abuse and the insider information has been a huge concern, and I think that the FCA has been losing a lot of sleep over that. But anyway, sorry. Go ahead, Sam. Sorry.
No. It's a decent segue on from what I was saying. So what I suspect may happen is that global regulators, and particularly in the US, are going to take a look at the Wall Street Bets threads and look at who is driving, who was driving enthusiasm for the threads. Because you've got two issues. Taking GameStop or GameStop is a particular example. You've got those who are the smash the Wall Street lot, and those who are saying, actually, GameStop is undervalued because there's a new investor. He knows what he's doing. The last quarter was profitable. They're going to shut physical shops and go much more online, and so they're going to play catch up. So I think they will focus on the second lot, because that's classic old school pump and dump, or that is language and involvement with market participants that regulators understand and to which they can apply old school rules.
PJ, I think one of the interesting aspects of this is the extent to which, if I've got this right, some of the hedge funds have had to sell sell down their holdings in other stocks in order to meet collateral obligations, and so you potentially got false values of stocks that in theory are nothing to do with GameStop or anything like that. So I think that drives, consideration of, liquidity, capital, and so on, and how much you have to put up against, some of these kind of, shorting strategies or whatever. I think that's part of the Robin Hood story as well, in terms of, suspending the, people being able to buy. So I think if you stand back and look at, there's something there, but I think, that potentially changed the way the market works. I think if you have to hold more capital against your position.
Yeah, and from a MiFID point of view and a MAR point of view, I mean, back in the day, Gavin, you were working internally with the regulators' controls around putting MiFID in, while I was working with the industry on what they were going to do to implement it. What happens when that pendulum swings to retail? Because these controls aren't really written for the crowd that's out there. I mean, all of a sudden, do we now start asking Reddit and all the other Facebook and all Google, all the other platforms to start now recording all those conversations, as we have to do for financial services, and trying to work out what is potentially a conversation that might be influencing the market?
Yeah, so it's very hard for regulation not to be behind the curve to some degree. So everyone talks about being forward-looking. It's more of an aspiration than a kind of a practical goal to a large degree. The question is really how far behind you are, and we all know that the timeline from MiFID being born in someone's head to actually going on the statute books, MiFID 2 would be the same, is pretty long. So the world changes in the meantime. And, one of the things about this is clearly some of this has changed. And so there's a bit of updating to do. And I think the other thing, just very quickly, is there's a kind of a spectrum between, vulnerable retail consumers up to kind of eligible counterparties and the big players in the market. And actually regulators are a bit schizophrenic about what they expect of that. On the one hand, they like the idea of things being accessible and so on, but actually they also recognize there's vulnerability and are not always very good at drawing the line. And so, there is that, when does retail stop being retail?
Yeah. I just want a quick question for everybody. What about the role of algo traders in the GameStop phenomenon? Some of these algo traders might be using something that's going to be, picking up on a stock that's trading a lot. There have been instances in the past where using alternative data, or algos using alternative data, or web scraping tools picked up on articles that have been planted to precisely to influence algorithmic trading in that regard. They were really advertorials that made it sound like some company was doing some kind of wonderful new thing, but it was really kind of a pay for play type thing. And that was something that was clamped down on in the past. So just when Sam and Gavin were talking, that was something that came back into my head. And I was wondering if anybody had any thoughts to chime in that regard.
What do you think, Sam?
Yes, I understand where you're coming from, Rachel, yeah. But I think there is a difference here, that nobody needed a web scraping tool to see what was happening. I mean, it made the BBC News. It's all over. There are hashtags all over Twitter and various other social media platforms that I do not frequent. It was pretty bleeding obvious.
Yeah,
And
blatant, yeah.
given the momentum, and I'm deliberately using market abusive language there, it would be very hard for an algorithmic firm to lean against that deluge of orders, or to get ahead of them, because if you are a large participant in the e-minis, you know who your, I'll say, competitors are. You know the other large participants in the market, and you can have tools to recognize others' appetites on the buy or the sell side, even if they're not shown or not obvious on the book, and you can lean against their orders. So you can benefit from an appetite that your fellow market participant hasn't publicized. Here, everyone's just along for the ride.
Yeah.
The flip side, though, and I do say this because I'm dearly loving the algo trading crowd. They're my people. Is that there is an expectation that they're going to catch the falling knife. So when retail punter Bob in his apartment wants then to sell his shares or his stonks, he is expecting somebody to be on the other side of it, and he is expecting to make a profit on his transaction. And if there should be no expectation that there is a liquidity provider or a market maker willing to take his price at the price he wants. And if he doesn't get it, he shouldn't be able to shout and scream that the system is rigged against him. And there are lots of ways potentially that the systems are rigged against retail, in terms of trading costs or the availability of pricing, or not understanding who your actual counterparty is, who is making it, all of those things. And these are all things that the regulators will need to wrestle with. But I don't think the algo trading guys have a particular dog in this fight.
Kevin, what's your take? I guess moving to priorities. Everyone's looking for what's next. What are the top three things you think are going to happen? In this space over the next over the rest of the year, and what are the key events that you're going to put in your diary to check in on?
What do you think? You're talking more generally now.
More generally, yeah.
So I think regulation in the UK is very dominated by COVID. I think it's changed what the role that regulators play. It's brought them much closer to government. It's pulled them into practices that they would ordinarily run a mile from. The whole kind of making regulations, putting consultations out for 3 or 4 days and then making rules and so on. Extending temporary regulations with only hours before they expire. Because the chancellors decided to extend the furlough scheme. Those things are all completely new. So I think there is something about what's the exit strategy from all this, and particularly on the FCA side, that's not obvious to me. So I think the budget will play a big role in that, because following what I just said, I think what the chancellor does will be a big influence, if not a driver. And I think in some shape or form, I could see the temporary regulations on mortgage and consumer credit payments becoming semi-permanent, because it's not obvious to me those people are any less vulnerable than they were a year ago. Quite the opposite, if anything, and there are more of them. So I think there's that. I think more broadly, there's something about what happens internationally. So I think the G7 summit in June, which we're chair of, for better or worse, in Cornwall, and is there going to be more concerted international collaboration on some of these issues, or do we really have a more nationalism-driven approach? And then I think the third thing is probably, again, it's a big international thing in the UK, but more specific is COP26 in Glasgow, because depending on what happens there, I think climate risk and what regulators do with that over the next few years is going to be absolutely kind of fundamental. And that's all tied up with, going back to where I started, it's clearly a different relationship between government and the major retail banks as a result of COVID, and all the loans they've dispensed and so on. So the way that jigsaw fits together over the coming months, I think is kind of where I'm most interested.
It's fascinating to think we're only in February, but we have all that to look forward to.
Oh yeah.
No, Rachel, what's your editorial calendar say? Does that jive with what Gavin's looking for?
Yeah, I wholeheartedly agree with his assessment that some of these consumer finance and mortgage relief programs are going to become more long lasting or even semi permanent, as he said, because there's so much to be worked out on the back of this. This is not a switch that you can just flip on and then flip off. Like Gavin said, people may be worse off now than they were before. We have a lot of other things filtering through the economy as well, like Brexit. The unemployment numbers haven't been great. And to be honest, my feeling was that even before we went into COVID, we were having a lot of problems in the mortgage market in terms of mortgage prisoners. And we also have this issue here. So those were people who were stuck in long-term interest-only mortgages that they couldn't get out of, and they'd become really expensive. And then we have this issue around cladding on certain apartment blocks here in the UK, which has created a new kind of mortgage prisoner. So people are stuck in these buildings and their flats are worth nothing and they're still paying a mortgage on it. And to make it worse, some of these are also like co-ownership structures. I mean, there is a lot to unpick there. It's not just, there's a lot of problems, and there's been relief given, I think, on auto loans and also probably some credit card payments. I mean, just in terms of having to do the accounting and figure out what kind of impairments that you're going to put on those kinds of loans in your mortgage credit card books, that's going to be massive. So yeah, you can't just flip the switch on and off with that. I don't think it'd be pretty tough. I would say two other things that I'm looking at in particular are reg change at the regulators, or change at the regulators. We mentioned BaFIN. We've got new people coming in the States at the SEC, CFTC. So that we'll have to see where the wind starts blowing in those places. Here in the UK, we've got new people coming into the FCA, into the senior management levels. The new chief executive's only been there since October. And we've also got a big technology transformation problem or program happening over there. We've got new people due to come in at ESMA, and we've got also, there's one more, that the Australian regulator as well. They're having some issues over there down at ASIC. So that's something. Operational resilience. the FCA is putting out a paper on Friday about looking at tech change programs at firms, so technology transformation. That whole plays into this big theme at all the big UK regulators about operational resilience. And part of that has got to be cyber. You mentioned the FireEye hack at the beginning of the session. Because the world is so crazy right now, nobody's even talking about FireEye. Also because it happened in the dying days of the Trump administration, and we definitely have a hear no evil, see no evil, speak no evil approach there. The FireEye tools are something that a lot of companies use a lot. It's a massive problem, especially with people working from home. Who knows? I guess cybersecurity teams would probably be deemed to be essential workers. I haven't really been getting a feel for how urgent firm big banks think that is. I imagine probably it's pretty high up their agenda. But another thing that some of my colleagues have been highlighting, and I definitely agree on, is we're still don't have this kind of technology expertise at the board level, at the senior management level. They just might not get this problem.
So
Anyway.
thanks, Rachel. I guess Sam leaves it to you to sum up. There's some fantastic perspectives there on just how this one market craziness of February the 1st plays into a much bigger gambit of things going on. What does it all mean from your point of view?
Well, I can't disagree with anything either Gavin or Rachel have said. They're both absolutely right. And there's been a very broad and helpful summing up of what we got to look forward to. It does, though, give me the opportunity to raise one point specifically about the relationship between regulators and retail on mortgages, consumer credits, all of it. I have a large number of colleagues and partners who deal much more in the retail sector of financial services, and their one big complaint is the delays in the financial ombudsman scheme and the FSCS. They're seeing delays in claims or adjudications of up to 2 years at the moment, and they're also very concerned about the compensation scheme levy, which affects both the retail and the wholesale end. Participants are concerned that they're going to be asked to increase their contributions for bad actors in their markets when they feel that they themselves are not bad actors, and that so their costs are going to increase because the regulator isn't doing its job.
Yeah.
I'm not saying that's true. I'm saying that would be the view if I was saying it.
Thank you, Sam.
And I think it all ties together back to Gavin's point about knee-jerk reactions from regulators. Is there a fundamental problem in the markets? There is, spoiler alert. And which markets on which do they need to focus? Because there are so many now, and they are increasing every single month as fintech providers and the fintech market expands. You've got peer-to-peer, crowdfund. The whole universe is expanding exponentially, and the way the direct effect it has on retail is whether you're a mortgage prisoner, whether you have been missold a car loan, all of that.
Can I
Sam,
just,
thanks very much, guys. I mean, look, this has been a fantastic wrap up. We're over time. I promised everyone half an hour, but I think it's been a great discussion. There's so much there to choose from. We're really going to have to focus and dive down to the next session. I think we're almost ready to do that now. So I leave it to everybody to figure out how to get the access on a regular basis to this Regcast, because there's an awful lot going on to stay up with. Keep up with. This is a great way to get your perspectives. I thank everybody, Gavin, Rachel, Sam, and everyone else who's planning to come on. This
Pleasure.
Invaluable conversation, and I will sign off here and looking forward to seeing you all again soon as we get the next edition of Redcast.
You can download the podcast via Spotify, Apple, and Google. But also, I'd encourage people to come to the JWG website, which, as hopefully you will know, is jwg-it.eu. Go to the Intelligence Hub and create your bespoke library.